Futures Radio Show, sponsored by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com.
Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudele sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudele.
Hey everybody, thanks for tuning in for this episode with Weiqin Dong. Remember, new shows are posted on Mondays and Thursdays. You can subscribe to the show on iTunes and YouTube. If you're enjoying the show, please leave a review on iTunes. Before I play today's interview for you, I want to give a shout out to the great sponsors of Futures Radio Show: CME Group, Trading Technologies, FTSE Russell, RJO Futures, and Top Step Trader. To learn more about these sponsors and the important things they are doing for futures traders, be sure to click on their logos on futuresradioshow.com. Today I spoke with Co-CIO, CRO of Buckingham Global Advisors, Weiqin Dong. We discussed the 5 components of her systematic trend-following strategy: macro, Fed policy, trend, sentiment, and market turbulence. Last but not least, we chatted in detail on how she executes her E-mini S&P systematic trend-following strategy. So without further ado, let me take you right to the show with Weiqin. Tell us a little bit about yourself.
Currently, I work as a co-CIO and CIO for Buckingham Global Advisors. Originally, I came from China 27 years ago after I graduated from college. I came here with a scholarship to pursue my master's degree. Upon I graduated from school, I started working for Motorola. While I was working at Motorola, at that time there was tech bubble. I started buying some stocks, but I didn't have a lot of knowledge in the financial market, so I would just buy what's hottest stock at the time. And then when the bubble crashed, I lost a lot of money. So I was thinking to myself, that must be a better way to investment. So that's why I decided to pursue an MBA degree in University of Chicago. Then, after I graduated from University of Chicago, I started working for a boutique quant fund that manages pension fund for CalPERS and the other biggest public pension fund. Then, because CalPERS was our biggest client, they decided to withdraw the money when they had to restructure. So we had a closed shop. Then that's where I started building my own trading strategy. That's how my future strategy started was born.
We're going to definitely talk a little bit about your strategy today, but let's just begin with why futures. Why did you decide to take the futures route?
Okay, actually, I've been doing more on the stock side, equity side. In the beginning, when I started working for the boutique quant fund, then I developed this strategy. I started trading with ETF, Spider. Then 3 years ago, Charles, the other CIO of the firm, and I bumped into each other. Actually, we were classmates from Chicago, so over 10 years ago. He said, your strategy will work very well with E-mini because the way I trade, then, that's how I started doing with E-mini.
Okay, so a friend saw that the way that your strategy was working for stocks and said, you know what, maybe it would work just as well with the future, specifically the E-mini S&P. So talk to us a little bit about your strategy.
Okay, my strategy is a 100% systematic, 100% systematic trend following model. I don't just look at the market trend. I look at all the drivers that they can move the market. There are some components you can model it, but some other components you cannot. Mostly it's like noise, like Trump's tweets. But for those components, I divide it into 5 subcomponents. One is the macro environment. The macro environment is always the one of the biggest driver of the market. And then the other thing is the Fed policy. There's a saying that don't fight the Fed. Fed always rises good for the Wall Street. So that's the component I look into. The other thing, of course, is the trend. The trend is your friend. But other than that, I also look into market sentiment. The model will follow the market sentiment until it becomes extreme. At extreme, this model will become contrarian. And then I also look at the market turbulence. When market is turmoil, then the market tends to underperform. So all these 5 components, 5 factors will give me a signal of -1 and 0 and a 1. Then I add them together, equal weighted. Then at the end of the day, I will see what the sum is. Then the model will decide to long or short or stay in cash.
Okay, so let's dig in a little bit deeper here. There's 5 components. So first of all, your systematic trend following. That's how you would define your strategy. Now, is this automated, or are you going in and manually putting these orders in?
Trading wise, so far I'm doing by hand. Okay. But the signal generation is automated. So each day, before the market close, my program will kick off, and will generate a signal for me to trade.
Let's start off with the 5 components, and let's talk about each one of them individually. You said the first one was macro. Explain to us a little bit about what you're looking at, and I think that you said it would be like a +1 or a 0 or a -1. Maybe just clarify that for us. I think what would determine in your model bullish, neutral, or bearish. So talk to us a little bit about that.
I mean, yeah, I've looked at the macro environments like inflation. Usually, when the high inflation environment, the market trying to underperform. So that's something I would look into it. And then, under the macro environment, okay, let me step back. On the macro environment factor, there are other sub-factors like inflation. So when I look at the inflation, I say, okay, how would the inflation impact the stock market? And then, then I look at the other components like industrial production, all this stuff. So there are like 5 to 7 individual macro factors I look into, and then under that, then I will also sum them together and form based on that sum, I form a signal of +1, 0, and -1.
So currently we're recording November 21st. What do you have the E-mini S&P right now for the micro or for the macro?
The macro is positive.
So it's +1. Okay.
Yeah.
All right. Next, you said the next component was Fed policy. So
yes.
Yeah, talk to us a little bit about what you're seeing there.
Yeah, the Fed policy actually, for last year when the Fed was tightening, my Fed model turned negative in August last year, 2018, and then turned back positive middle of December 2018. And this year, because the Fed is, it's not, they're doing QE, even though they don't want to call it a QE. I mean, at least, Fed is cutting interest rate. The Fed model has become positive. If you look at over the last 10 years since the, financial crisis, the Fed model has not turned negative for a long, long time, other than last year. Last year is the only time that it turned negative in the last 10 years. Of course, it turned negative based on my back testing, was negative during the financial crisis. Fed turned to, affect the market very much. I think the bull market for the last 10 years is driven by the Fed policy.
And currently, right now, for the E-mini S&P, you have Fed policy as a +1 as well, so bullish, correct? All right, the third component, trend.
Yeah, the trend, it's your typical trend thing. I look at the breadth and depth of the market. If the market is going up, but it's only driven by few big stocks, then the breadth that impact will not turn positive. And also I look at the international as well. So right now, the trend model, of course, is positive because we have been going up nonstop since early October.
Identifying the trend is for you, is it just higher highs, higher lows? Are you using some sort of tools, maybe just as basic as a trend line? What determines for you, I know it seems like a very simple question, but that whether or not we're in an uptrend, a bullish trend, or a bearish trend?
Actually, it's a great question. Trend is as simple as just look at the line; it's going up. I don't look high, low of like that technical stuff, but I do look at the moving average. If 50-day moving average and 20-day moving average, and also I look at the market new high and new lows. Are we keeping making new highs? The internal components making new highs, new lows. And also I look at how many international markets are in the uptrend. They're above 20-day moving average, something like that. So it's a tricky component because sometimes like last year in December, even fourth quarter, the market was going down. You can call like downtrend, but if you look at the longer term, the market is still in uptrend. So it's tough. So how you defined the trend, how long the time frame is important.
Yeah, one thing I want to ask you about when you mentioned that you said you're looking at the 20-day or the 50-day moving averages, I'm just curious, are you looking to see if the E-mini is sustaining above them, or are you looking to see if those averages are continuing to move higher? Because, we could be trending higher and maybe just, getting back above and below the 20 and 50-day moving averages quite often, but the trend could still be up. So I'm just wondering, like how would you interpret that when you're looking at those moving averages?
I look at the, if 50 days is below 200 days. If it's 50-day move below 200 days, I think at least for that component, I think it is negative. But that's not only thing I look at. I look at as if the market internal component keep making new highs or new lows. The more new highs or new lows, and also I look at the breadth. It's like so if the market has been going up too much and it's coming down, then then the trend could be going to negative. But there are so many components. There are 7 components in there, so each component has its own score of -1 and 0 and +1. So at the end of the day, each component has its own impact. Even though maybe 50 days move below 200 days, and the other components say they're uptrend, so the trend component still could be positive.
I got you. So what you're saying is that when you're looking at the trend, you have multiple components in there that are determining a +1, 0, or a -1. And then, for example, if 5 are positive and 1 is neutral and 1 is negative, it's still positive. Or
yes.
it depends on how many are positive versus how many are neutral or negative to determine the trend.
Yes.
Next thing I want to talk about is sentiment.
Well, they say trend is your friend, but then when trend becomes too extreme, then usually pays to take the contrarian position. Even right now, from the components I'm looking at, the market is overbought. So my sentiment signal is actually is negative right now. So I looked at weak and skewed ratios, and also looked at how many stocks are advancing and declining. So that gave me a measure of sentiment. Then if they go too high, not too high, too extreme, right now, I think the market is overbought. And then, like in December last year, then, this is oversold. That time the market sentiment signal was actually positive. And then right now, even the markets keep making higher high, then my sentiment is negative.
What tool do you use to determine whether or not a market is overbought or oversold?
Well, as I mentioned, I look, into weeks, but I don't look at weeks absolute level. I compare weeks with previous, 6 months ago, 3 months ago. Then I also look at the risk and skills ratio. Then I also look at how many for New York Stock Exchange stocks, how many are advancing and decline, so advanced decline lines for both issues and volume. So that's what I look at.
Thanks for sharing that. Now, the fifth component of your strategy is market turbulence.
Turbulence is something I came up. Turbulence is when I look at market turmoil. Usually when the market is in a lot of turmoil, the market tend to underperform. Like last December, the turbulence model was negative a lot of time or neutral. So this component actually it changed frequently. So today could be negative, tomorrow could be positive. Just depends on the market environment. What I measure is, I measure the correlation relationship between different assets and different sectors, just to see, if there's any change or not.
I definitely understand this component, but can you just give us just a little bit more detail on what you're looking at when you're determining market turmoil, market turbulence?
If you think of what the other four components, I don't have a component to see. I have weeks. I have sentiment, but sentiment, the way I do it is contrarian. But, if the market like last December, even though, my Fed component was negative, but I don't have anything to measure how violent the market was, So that the turbulence component was just for me to measure if the market is moving violently or not. When that happens, usually the my turbulence component will pick up that, and the signal will change to neutral or negative.
How do you measure the turbulence?
Well, I looked at the correlation and dispersion of different asset class. So if it's correlation, if the relationship changed from the historically, then I think this market is in turmoil.
And right now, what do you have it for the E-mini S&P?
Right now, it's positive. So
it's positive.
For to summarize. What I have, the 5 components right now, only sentiment is negative. Everything else is positive. So I have a 3 score, score 3 because, I have 4 plus and 1 minus 1. So then adds up to 3, which still tells me to long the market.
Yeah, so sentiment's -1 just because you think it's overbought.
Yeah.
And now I want to talk about execution. So I think everybody understands your process. And really, It's well thought out. You're going through a lot. And like you said, all of this is all automated for you to where you get those scores, correct? You punched everything in. All right. And it tells you what they are. Now, before we start talking about the execution of it, this is updating every day, right? Okay. So every morning you come in and you look to see what it's telling you, what your score is.
No, actually, I trade at close. So every
at the close,
the program will kick off at like 3:55 Eastern time. They kick off and give me a signal, so then I can trade. But of course, during the day, I will run the program just to make sure everything's okay. I don't have data issues. Sometimes Bloomberg can give me funky data or something else. So and then I also get a sense where the market is, and remember my signal is. But the 355 one is the final signal. I based on that to trade.
Hey everybody, I want to take a moment to thank one of our sponsors, FTSE Russell. They are a leading global provider of benchmarks, analytics, and data solutions. The Russell 2000 Index is a key benchmark for small cap U.S. stocks. Be sure to check out the E-mini Russell 2000 Index Futures, contract symbol RTY. For more information on FTSE Russell and their products, please visit FTSERussell.com. A couple of questions before I get into how you're trading the E-mini S&P specifically with this current score, because I want to talk about that. But just so I know, in this particular instance, we have a +3. So that's just bullish. That just means that you're going to be looking to get long, right?
Yeah.
What is the score to where you'd be neutral, flat, and then also what is the score to where then you would start looking to get short?
Okay, so plus equal to 3, it's long, and if it's 2, then it's cash. If it's 1 or below, it's short. Because the way I build the model has a little bit long bias. That's why the scores tend to be a little bit higher than instead of cash at 0.
I get it. It's because you built the model specifically for the E-mini S&P. And because the S&P goes up more than it goes down over time, at least for now, that is why your number system is the way it is.
Yeah, okay. When I build a model, my assumptions, I'm going too long until I find something to have reason to short. So, because historically the market has been bullish. So that the model build has a little bias towards the long. But so if the market the bullish time, the market, so I more behave a long, I long more than short. But if you look at the back test, even I short whole month of last October, so that month I was short. And if you look at the back test, for 2008 or between 2001 and 2003, I spent more time shorting than long.
All right, well, let's talk about execution now. And you said that right now, I asked you this earlier, that you're putting the orders in manually. The strategy is systematic and it's automated to give you your signal, but you put the orders in manually.
Yes.
So you have a score of +3. Talk to us about how you approach executing this now. And let's take it from the very basics of, are you just using futures? Are you using options? Talk to us about the process for entry and then how you would determine a stop. So take us through all of that.
Okay. So, I only trade E-mini SP 500. So let's say today's score is 3. So I have to long, but if yesterday I was long, then I do nothing. If yesterday I was cash, I would buy. If yesterday was negative, it was short, and I will buy back the short and buy long. So that's how I trade. I don't use options. The stop loss, I have a soft stop loss. Just when if I lose more than 5% in a month, then I will go half position for the rest of the month. So that way I can just control the loss. Historically, for the back testing, even for the real time, my maximum drawdown is 15%. If you look at SP 500 during the 2008, it was 57%. 2001, 2003 was 47%. But my back testing and the real time trading is 15%.
So just so I'm clear, so if you have the +3, it's bullish on the close. Are you buying right away then? I mean, talk to us about when you're getting in. Are you buying before the market closes? Like you said, I think 3:55 Eastern is when you're getting your signal, or are you waiting for the next day to buy in the open or sell? How does that work?
I buy at the close.
You buy right on the
buy
close.
market. Yeah.
And is there ever a time where you're adding to these positions, or is it all in all at once?
I have when they're long, there are two positions. One's 100% long, one's 50% long. Then when I short, it's only 50%. That's, the reason I only short 50% is, I think the market has the inheritance going up. So you tend to be wrong more than shorting than long. That's just my view. So let me explain to you the two positions of the long side. So I explained to say, when the signal is great or equal to 3, I long. But if everything else is 1, but turbulence is -1, I go 50%. Just because turbulence can catch the different things at different times, even though everything else looks great. But if turbulence is -1, it can catch the market go down, and when other components cannot. So that's why I gave a little bit more weight to turbulence. When it is negative, everything else is positive.
Understood. So it's going to be depending not only on the score, but it's also dependent on which score is which, right? So there's some discretion to it, right? Because the turbulence, if that's a -1, like you said, and everything else was positive, you would probably be in a 50% position because slippage, basically, right? I mean, you might get stopped out or might lose and ultimately still be right. So you take your risk down.
Yes, but I mean, that's, I do that consistently. I don't just say because today it's turbulence -1, I'm going to take 50%. I just do it consistently. I don't override the model. I mean, I overrode the model a couple of times. Let me just backtrack. I overrode the model when I was trading with SPY in 2016. I overrode twice. Once the election. On the election day, before the election day, my signal was still long. So I took I cut half just because I think that's a very binary event. So I cut the position half. That didn't save me any money. Just, the market went back tomorrow, the second day. And also I took half position at Brexit. That, helped me save 1 or 2%. There's only 2 times since I live trade my portfolio that I had discretion to cut position.
And that's just experience. I mean, you know that there's things going on in the world where you're saying this system doesn't see what you're seeing with all the things happening, like specifically at Brexit or the election or things like that.
Yeah, I mean, it's a binary event,
Yeah.
The model wouldn't be able to tell. That's, and this market moving is a big market moving event. That's why I took discretion to cut down position. But other times I don't.
A few more questions before we get into rapid fire. First, your stop is not a price stop. You're not saying I'm wrong if the market hits X price. When you buy or sell, you put a percentage of risk up into that trade, and if that gets stopped out, it's because of that, not because of a specific price or something that would trigger that you no longer want to be in that trade. Am I right on that?
Yes, I don't do stop loss. I mean, usually that, stop loss, usually you just stop at the worst time. And the other thing is, because the way my system is built, I know my maximum drawdown is, and I convey that to my clients. I think, if my live trading doesn't exceed my backtesting drawdown, I think that's still within parameter. I don't think I need to do anything, even though, the market could move against me, against, the model, however well I designed it. and they can still be wrong. So, but within that set, I think at times the market can go against me very badly. So that's why I put a soft stop. If I lose 5% for the month, then I just go half for the rest of the month.
Understood. What about getting out? We didn't talk about any targets. Is it just you wait for the signal to change to a negative or a neutral if you're long, or if you've gotten X amount that you've made in the trade? I guess I'm just wondering, how do you eventually exit?
It's all based on the signal. I don't base on how much I have made.
So if the signal's positive and you bought, let's just say hypothetically you bought today, and it stays positive for 3 months, you hold it for 3 months. It goes neutral in 2 days, you get flat.
I go cash.
You go cash.
Yes. Yeah. So I went live. I think the longest I haven't traded maybe it's a couple months. Not a couple months, maybe a month. I didn't trade for anything. But the shortest holding period is a day. I could long today and go cash tomorrow or go short. That depends. I don't have a target say, when I enter this trade, I'm going to stay for X amount of time. It's all based on the signal. So I could trade very frequently every day. If the market goes, if the signal indicates so, or I could stay as long as 6 months. This is the back testing shows that I didn't trade anything for 6 months.
How long have you been running this model for clients?
I start, as I mentioned earlier, I started with trading with SPY at 2013 with my own money. Then at 2014, I started have my first client. And then, I started trading with futures at 2017.
And what have your returns been since 17?
Since 17, I think annualized return is about 10%, maybe slightly lower than 10%.
Okay, so roughly 10%. And what is the minimum investment that you're requiring for investors or traders to put in with you?
I right now at 400,000 for minimum investment, but we could have a discretion. We can go down to 200K. The reason is just because when I short half, so I need enough capital to have a half position to take E-mini. E-mini right now is the notional is 150K.
And with that 400,000, how many contracts would they be trading?
As a longs, before 4 contracts. Short would be 2 contracts.
Fantastic insight today. But we are not done yet. I have some rapid fire questions next if you're ready for those.
Okay, sure. Thank you.
All right, everybody. And now for our rapid fire segment sponsored by Trading Technologies. Trade the global markets with TT. They are the world's fastest commercially available futures trading platform. Now with integrated tools for advanced options trading, cryptocurrencies, and trade surveillance. You can try it now for free at tryttnow.com. Weiqin, first question for you. What trader has influenced your life the most and why?
Well, I wouldn't say a trader influenced me most. I think it's my education from University of Chicago. Their quant strategy approach and my engineering background, I think, make a good combination for me. The style just fits me well.
What was one of the hardest things for you to overcome in trading?
I think control the emotion, especially when the market moves against your position. I think that's the most important thing and the hardest thing to do for any trader.
How has your trading process evolved over the years?
I talked a little bit about my, my model. Over the years, I have fine-tuned the model, but the main structure hasn't changed much. I will continue to go fine-tune the model, and as new things come up and new ideas come up.
What is one attribute that you believe every trader should have?
Know your risk. Know, when the market moves against you, how much you can lose, and how you can bounce back.
Favorite book about trading?
There's no one book. I think it's, as I said, the education I have, and also reading different people's view. And also verify the people's view. If someone say market's going to go down, I would see how they, what's the reasoning, and if I can verify it.
If you had to pick a profession other than trading, what would it be?
I would love to educate people about investment, not just trading. I have a lot of friends that are very successful with their career, but they have no idea how to invest their money. So if I could get that to people, that'd be great.
What's the best piece of advice that you received about trading?
My old boss used to tell me that return is what you can eat, but volatility is what kills you. So it's important to build a good return strategy, but volatility is as important, if not more important.
If you could go back in time and give the younger you a piece of advice, what would it be?
Follow your passion. Don't just follow what's hardest at the moment.
If you had an elevator pitch me your edge in trading, what would you say?
I'll say, my background, my unique background of software engineer and my quant training from University of Chicago give me an edge. I wrote every single line of my code, so I know inside out my strategy. And also my strategy has been backtested for over 20 years. It went through, backtest over the last 2 bear markets.
Last question for today. Favorite thing to do when you're not trading?
I run and I do kickboxing. Actually, I finished a half marathon a couple of years ago. And also, I love being a mom with 2 teenagers.
Nice. I love to run too. Do you feel that when you're running, it's just like that time where really nothing else matters? You're just focusing on your run, your breath, and everything. And to me, it's one of my favorite things to do when I'm not trading as well.
Yeah, just relieve stress and, just one foot ahead another. Just try to, run and get the fresh air and everything. It's just so great.
Yeah, I completely agree. I know a lot of traders that running is one of their favorite things to do when they're not trading as well. Now, Weiqin, I know that you're not on Twitter. Why aren't you on Twitter? No social media.
I'm on Chinese WeChat. That's every Chinese on that. I'm a more private person. I keep my view to myself a lot of time. So I don't have a lot to say. But if everyone wants to ask me anything, I'd be more open to talk one-on-one.
I hear that. Well, where can people find you and learn more about you then? Maybe give us a website to check out.
Yeah, you can go to our website, buckinghamga.com. You can find our information, or you can always reach out to me with my email, wdong@buckinghamga.com.
Weiqin, what can I say? This was so much fun. Fantastic insight. Thank you so much for joining me on Futures Radio Show today.
Thank you. Thank you for having me. It has been a great time.
Thank you for listening to Futures Radio Show. If you have any questions or comments for myself or my guests, please visit futuresradioshow.com and sign up to be a premium member for free. If you enjoyed the show, don't forget to leave us a review on iTunes.